Picture a man who's banked at the same place for 30 years. He walks in, asks for $5,000 of his own money to help his grandson with a deposit on a first apartment, and he walks out with his entire account frozen. Not for an hour, for 19 days. No groceries, no electric bill, not $1 of his own savings. And here's the part that should stop you cold: he did nothing wrong. No scam, no mistake. The bank froze him on purpose, and under rules now on the books in most of the country, they were completely allowed to. If you're over 65, this can now happen to you, and almost no one has been told. Because the day you turned 65, you quietly crossed a line you didn't know existed. And on the other side of it, your bank can legally hold your withdrawals and lock you out of your own account for up to 15 business days. That's 3 full weeks on the calendar. I went through the new state laws, the federal guidance, and the bank policies, and I found 6 specific things that can trip one of these freezes. Some of them you probably do every single week without thinking twice. And the 6th one catches people who are only trying to move their own money between their own accounts. But here's the good news, and it's the reason to stay to the end. There's one thing, one free phone call you can make this afternoon, that makes you almost impossible to freeze. Almost no senior has heard of it. I'll hand it to you. But the order matters, so don't skip ahead. If you're over 65 or you love someone who is, this is for you. Let me explain what actually changed, because this is the part the scary headlines leave out. For years, when a bank suspected an older customer was being scammed, its hands were mostly tied. It could warn you, but it couldn't hold your money, because if it delayed your transfer and it was wrong, you could sue. So the money moved. Then fraud against seniors exploded into billions of dollars a year, and lawmakers decided banks and brokerages needed the power to step in. So they passed what are called safe harbor laws. The model version has now been adopted in 34 states and jurisdictions, and more are coming. In plain English, a safe harbor law says this: if the institution reasonably believes an older customer is being financially exploited, it can freeze the transaction, hold the money, and delay your access, and you can't hold it responsible for the delay. The word these laws use is specified adult. And a specified adult means anyone 65 or older. That's you. That's the line. Now I want to be fair, because I'm not here to frighten you. The intention behind these laws is good. They were written to stop a grandmother from wiring her life savings to a fake grandson in jail or a romance scammer she's never met. That is a real and terrible problem. But here's the part that affects the honest senior who isn't being scammed at all. The bank can't tell the difference between a scam and your normal life. So it builds systems that guess. And those systems get it wrong constantly. Let me show you exactly what trips the wire. Trigger number 1. A sudden, large withdrawal or transfer. If you've had a quiet, predictable account for years and you suddenly ask for $10,000, $15,000, $20,000 for a grandchild's down payment, a car, a roof, that request alone can flag your account. The very thing you saved the money for is the thing that freezes it. So here's the move. Never spring a big withdrawal on your bank cold. Call ahead, or better, walk in a few days early and say it out loud. On Friday, I'm taking out $15,000 for a new roof. Saying it in advance on the record does 2 things. It gives them time to have the cash ready, and it puts a clear, innocent reason on your file before the software can invent a suspicious one. Announced money doesn't look like stolen money. Surprise money does. Trigger number 2, and this one catches the most innocent people: a change in your behavior. Banks now use automated systems that learn what you could call your financial rhythm, how you normally bank. And the moment something breaks that rhythm, it can get flagged. Some of the things that can count: logging in from a new phone or tablet, the kind your kids give you as a gift, using Zelle or Venmo for the first time, sending money to someone you've never sent money to before. None of these mean you're being scammed. All of them can draw a second look. So when something in your life genuinely changes, tell your bank before the computer notices. New phone, new payment app, a new person you're helping, it's worth a 2-minute call to say, "This is me. This is new and it's normal." You're writing your own explanation before the machine writes a worse one. Trigger number 3, the structuring trap, and I need you to listen closely because good people have lost everything over this. Say you hear that moving $10,000 or more in cash triggers an automatic report. So you think, fine, I'll take out $9,000 today and $9,000 next week and stay under the line. Do not ever do that. Deliberately breaking up your money to stay under the reporting line is itself a federal crime. It's called structuring under Title 31 of the U.S. Code, and it doesn't matter that the money is 100% yours and 100% legal. The act of breaking it up is the offense. People have had accounts seized for it. Now, to be fair, after thousands of innocent people were caught, the IRS changed its policy back in 2014 and largely stopped chasing honest money. So don't panic. Just do the opposite of hiding. If you need a large amount, take it in one clean transaction and let the routine report be filed. That report is harmless when your money is honest. The danger was never the report, it's looking like you were trying to dodge it. Trigger number 4, the dormant account sweep. And this one quietly drains money from seniors every year. If you have an account you rarely touch, an old savings account, a CD, a fund you set aside and left alone, and there's no activity on it for a stretch of time, often around 3 to 5 years depending on your state, the bank can legally declare it abandoned. And when it does, it hands your money to the state as unclaimed property. Your own money sitting with the state, waiting for you to come find it, which most people never do. The move is almost insultingly simple. Touch every account at least once a year. Log in or move a single dollar in or out, anything that proves the account is alive. 1 minute once a year per account keeps your money yours. Trigger number 5, the investigation frees itself, the one I see do the most damage. When any of these systems flags your account, the bank can freeze it while it investigates. During that freeze, you may not be able to withdraw, transfer, or in some cases even see your money clearly. Your deposits keep landing, you just can't get them out. And the people on the phone, the tellers, often can't lift it because a separate department placed the hold. So here's the move the scary videos leave out. The moment you sense a hold, ask one question and one question only: which department placed this, and how do I reach it directly? Then get the reason and the expected end date in writing. You have a right to both, and the institution that has to put a date on paper is the institution that moves faster. Trigger number 6 surprises people who are simply moving their own money between their own accounts. If you try to wire money to another state, to an online-only bank, to a brokerage, or to an account you just opened, the system often reads distance and newness as danger. A transfer to a bank it doesn't recognize in a state where you don't live, into an account that's only a few weeks old, to the software, those 3 things together look exactly like what a scammer does with a victim's money. So move in stages. When you open somewhere new or plan to shift money to another institution, send a small amount first, let it clear, and call ahead so the transfer is expected on both ends. A planned, announced, gradual move sails through. A large, sudden, first-time transfer to an unfamiliar place is the one that gets stopped. There's one more layer I want every one of you to have, and it has nothing to do with the bank. Keep a modest amount of cash safely at home. I'm not telling you to empty your accounts or distrust your bank. I'm telling you that if your account is ever frozen for 3 weeks, you still need to eat, pay the power bill, and fill your prescriptions. A reasonable cushion at home turns a freeze from an emergency into an inconvenience. The people who panic are the ones with no other way to reach a single dollar. Don't be one of them. And that brings me to the most important part of this whole video, because everything so far has been the problem. Here's the solution. The single most powerful thing you can do, and it's so simple most people skip right past it. It's called a trusted contact. Almost every bank and brokerage now lets you name one, and shockingly few seniors have. A trusted contact is one person, a son, a daughter, a close friend whose name and number you give the institution in advance. Here's why it changes everything. When the system flags your account and they're about to freeze it because they think you might be getting scammed, the trusted contact gives them someone to call to check that you're fine. Instead of slamming the door for 15 business days, they make one phone call. Your daughter says, "Yes, mom's buying a car, that's completely normal, and the freeze never happens." You've preloaded the answer before they ever ask the question. And here's the part that makes it safe. A trusted contact can't move your money. They can't see your balance. They can't make a single decision for you. All they can do is vouch that you're a real person living your real life. It costs nothing, and you can set it up with one phone call this afternoon. If you do only one thing after this video, do that. But the people who never get frozen set up a few layers, so here's the rest quickly. Set up a durable financial power of attorney in a form your bank will actually accept, because banks reject generic internet ones all the time. That means someone you trust can always step in and free your money if you're in the hospital or simply can't get to the branch. Keep a second banking relationship. Never let one institution hold all of your access. If your main account is ever frozen, a small backup account at a different bank is a lifeline. And add a payable on death or transfer on death designation to your accounts, so the money passes straight to the people you name without getting trapped in a slow legal process. Now think back to that man at the start, frozen for 19 days. The $5,000 was to help his own grandson with a first apartment. The boy really had called him. He was thrilled to help. But because it was a sudden, large withdrawal to a young man, exactly the pattern these systems are trained to flag, the bank froze everything while it investigated whether the grandson was a scammer. He did nothing wrong. The system did exactly what it was built to do. And here's what gets me. If he had simply named his son as a trusted contact, one phone call would have ended the whole thing in an afternoon. He didn't know the option existed. Now you do. And if you're watching this with an account already frozen, here's what to do in the first 48 hours, because the first 2 days decide how long you stay stuck. 1. Don't argue with the teller. They didn't place the hold and can't lift it. 2. Ask which department placed it and how to reach them directly. 3. Give them an easy way to say yes. Offer your trusted contact. Offer a family member who can verify you. 4. If it drags past the date they promised, escalate. Every state has an office that regulates banks, and a complaint there often gets a response in days. I know it can feel like the rules are being quietly rewritten against the very people who save the hardest. But you're not powerless here. A trusted contact, a proper power of attorney, a backup account, and announcing your big withdrawals are small, simple moves that together make you almost impossible to freeze. One honest note before you go. This is general education, not personal financial or legal advice. The details vary by state, so confirm your own plan with a CPA or an elder law attorney. So do 2 things today. Call your bank and name a trusted contact. It's free and it takes 5 minutes. And send this to one person you love who's over 65, because the bank is not going to call them and explain any of this. You might be the only one who does. I'll put the form names and the official links in the description. Subscribe and turn on the bell so the next one finds you, and I'll see you in the next video.